divas start screaming. And oh, how the boys are beaming. Where your feet can take to flight. And the DJ makes it right. Ah, the underground, baby.
Bruh.
Ah, the underground.
Sorry about the lady moaning. You just never know sometimes, right? When ladies will moan randomly. Hello, traders. Welcome to the midweek stream where there has been extreme price action. Not really, actually. But yeah, intraday compared to what we've been seeing, pretty interesting. I think nearly a 6% swing from the high to low. So about what, 2.5%, 3% swing from the bottom that we saw today, the lowest price of the month. In fact, the lowest price we've seen since March. Bitcoin saw $26,800. And it's just literally the exact same price it was at yesterday, man. And guess what? Yesterday's price was the same price the day before. Welcome to dead markets. Welcome to illiquidity. That's all that this is. And I can imagine the amount of real people trading on exchanges now in crypto has to be at some sort of multi-year low. Has to be. And I mean, what I'm saying is like, it's not humans. It's like algorithms and bots currently trading this market, wash trading up and down, whatever, sideways. And this is the case, man. We've been stuck sideways since mid-March, and it's just not really where the story is. Bitcoin doing what it did today is not really a big deal. Okay, cool. Hey, good news. Buyers defending this somewhat kind of a demand line, right? They're holding it. They tested it again. You're not making a lower low yet. It's not over yet, man. And that's it. That's it, man. It's been a mixed bag on coins today. Like some have been decimated, right? Talking about WRX, Bitcoin Cash, you know, it was up 10% yesterday, down 5% today. YFI screwed, YFI screwed. Maker down, EOS, Monero down somewhat. But crypto really, man, is just, you're gonna have to understand. It is such a small glimmer of the financial markets. It's almost nothing. And it really becomes almost nothing in market conditions like this, where even in the FOMO mania, yeah, it might have the spotlight on it. But man, when you get in market conditions like this, the spotlight is just not on crypto right now. It is on the equities market and the bond market. And so we'll look at that because there's a lot of things to talk about, a lot of sectors to look at. But if you don't know, not today, but Tuesday and Monday were the lowest volume days of the entire year of 2023 for the S&P 500. Right? So selling may go away on steroids, man. Here's Ethereum. It's already done like the kind of bearish indicator of thrusting the back test, falling below the heart line, and you'd think eventually 1730 if anyone's trading anymore. It doesn't look like, looks like 5 people are trading now, right? Can't hold 1730, demand line. Same analysis yesterday, just tune into 90 stream and all will be the same. We can just switch to the quad screen. Here it is, man. Wow, dude, another day. Ethereum. It was April 21st. It's now May 10th. Same price, whatever. Somehow buyers defending the demand line, or I guess the bots. The bots are defending the demand line now. Should be. It's always been like that, mainly bots, but dang, dude, it is just all caps now. And then XRP, you know, just hanging out. You know, you saw the drawdown because of Bitcoin earlier. That scar is everywhere on all of them. But then the nice recovery, but the recovery really into nothing, where we're just in the same spot we've been at for days and weeks. Yeah, I wish there was more to that. Crypto riveting. BNB bottom right, nothing. Same price it was at days ago. Okay. Awesome. Hey, might be a record stream. Might be live for 10 minutes. Cabo. Still getting situated over here. You even need to look at these S coins, man. Again, it's just like we're looking at them. It's just us and the robots. Yeah, some assets are up today. I mean, like, you know, the ones that got just obliterated yesterday are up. We're just wiping out some of the losses. It just doesn't, like, not significant. So you know what? Screw it. I'm on strike. I'm going to immediately going to the S&P 500 right now. That's as much time as we're spending on crypto. It doesn't deserve any more time. I'm sorry, man. Just doesn't. Yeah, screw. Oh, imagine asking for Cardano unironically. It's up 2%, meaning it didn't do anything in the past 2 days. Nothing. And I mean, it is pretty awful on the S&P too. I mean, the index fund is individual assets, the only place, the only safe haven for, hey man, we get to talk about TA and it's cool. Here it's just bot driven, dead, no volume, market. That's where we're at. S&P, any resolution? No. Has the shooting star been violated yet? No. You got to get a candle close above 4170 to invalidate a shooting star bearish reversal on the second high. Have you taken out the highs from February yet? No. Have you taken out the highs from August yet? No. Okay, that's it. Just bots. Just robots all day. Dow Jones. Yeah, I know the rally, the power hour rally. Like, yeah, this is what happens. It sold off intraday and then last hour trading, the rally, and you closed almost identical to where you closed yesterday and a little bit lower than the day before. So down 0.09%, still below 33.7. Have you taken out, have you violated or invalidated the shooting star reversal identified from May 1st? Nope. Have you taken out the inflection point from 33.7? Nope. Have you made a higher high than the high from February, December, August, April, last year? Nope. No higher highs yet. So, no change. Still looks kind of bearish. Classic distribution. Dow Jones, lots of downside if there's ever any kind of follow through. But when's there going to be fall through? Who knows how long this is going to last, man? The quantitative tightening, taking money out of the system, and this is what you get. Now, tech, though, you know, Nasdaq, all right. It did stuff. Effing finally, man. Highest daily candle close on the Nasdaq composite since August 25th. You can thank big tech saving the day. It really is. That's great, man. Here's the thing. Always something, right? Where that we know the inflection point is 12K, 12,070, but we know the fake out level, and you've just gone up to test that fake out level from June of 2022.
Slow market, but still enjoy your analysis anytime. Good sir, can we look at Pol on Qcoin?
We can look at POLX. If you want to watch a bunch of bots do nothing, we'll go to it. Thank you, dude. I really appreciate the contribution, man. Seriously. I'd be the only one. All right. So, you know, critical area on the test. I'm just happy that finally something happened where it broke some resistance, a 1 month long resistance that had been created. You know, it's just sitting there and now finally did it. But it was on like CPI report. Oh, give me a break on the CPI report, you know. Used cars went down. Some oil prices went down a little bit. Anything that you and me consume or purchase at a store, sweet mother of God, it's only going up. But hey, that's the whole point, right? That's how they gauge the metric of inflation. It's really just all for show. It's all, you know, and also it's this Social Security. Inflation dictates the amount of, you know, money that is paid out in Social Security. So the lower it is, the better for them. So that's why they manipulate it. They've changed that metric 21, 22 times in 30 years now. So what we say yesterday, right? It's going to be just slightly lower, like 0.1% or something. And it was, right, estimated 5% and 4.9%. Let's go. Because it's a joke. That's not even guessing. That's just like, oh, this is their theatrics, right? Political theater is this number report and it's lower. It makes them look good like they're not doing anything, man. They're just raising interest rates. The fastest pace ever. All right, and I don't think even any of the stuff that has gone down in inflation had anything to do with interest rates. So $420 likes would be bullish. Yeah, it would. It certainly would at this point, which is sad, right? Remember, we used to get like 1,000 likes a stream. Okay, IWM, that, of course, same clown show at this level. I don't know. It's holding now. Wait till tomorrow. Illiquid dead markets, gapping up, gapping down, gapping up, gapping down. That's all that happens. Pre-market, after hours, bullcrap every day now. But it's still above 173.39. You did it, man. You're holding above the 2018 high until tomorrow, right? And then you just gap down. Who knows, right? Just, it's a joke, dude. Hey, guess what? IWM, Russell 2000. You're at the same effing price you were at in May of last year. What a joke. Same price. Awesome. So let's go to where it's actually, there's some stuff happening. I'll take anything, man. Just give me some. Oh, thank God. Like the KR8, right? The regional bank ETF drawing down. I mean, it was down worse. It couldn't even make it to be down 1% on the day because of just that end of day little rally. But that 3660, 3687 level being tested again as support. But a bearish engulfing candle covering the previous candle completely. Second lowest daily candle close of the entire drawdown, where there's this last level. If you don't hold 3660, at this point I'm rooting for it because I just need something, man. Market conditions are dead. So I'm ready for a collapse, a crash. I don't care as long as we get it. But yeah, the next formal support probably about $35. If support can be taken out by the sellers. I don't know what fundamentally has changed. Interest rates are higher, so unrealized losses are higher. So, and people, I think, every day would be leaving low yielding savings accounts, banks, right? They'd be taking out their money and putting it in a treasury bonds or some high interest rate savings account somewhere else. So nothing's changed. Actually, a little bit worse, 25 basis points worse. So you'd think this level would break 35. You break 35, then you go to $30. Okay, it's an ETF, remember? So it's not like that crazy. PACW led the charge a little bit on, until the rally, but it was down 0.49%. So it's just everything's getting tame. All right. But after hours, it's down 1.15%. Some of these banks are down after hours. So you think probably going back to $5 again. There's an unfilled gap at 316 down there. Yeah, this is kind of where a lot of stuff's at. You have some key breakdowns, some follow through today. MCB was a big loser. The biggest loser, really, or on the watch list. It's down 2% after hours. After hours selling. Bearish engulfing candle today, and it just looks like 1823, 1576 looms again, right? Metropolitan Bank Holding Corporation. These levels back from 2020. It looks like there's no bids, and the sellers are going to push the price back down those levels, you'd think, based on just fundamentally how bad things are. Key, another really bad one we've been monitoring. Guess what it did? Remember what happened? Well, we literally discussed it day by day yesterday on stream, where it broke the level, then it formally back tested as resistance. It gapped up because CPI and bullcrap. What's up, David? Thanks for the 420, man.
Is that a...
Well, I mean, we did crash multiple times last year, and it was nice because the TA was respected with the confirmation highs, back tested resistances. It was amazing on the way down. But now that we've gotten to like this new floor, it's been a year of just sideways, and it is brutal. So, but look, I mean, Key Corp, as it has failed once again, right? The buyers have failed once more to break back above $10, $9.80. And that is everything on this chart. As you can see, 2016 low, and here it is, 2009, 10, and 11. Being below that, formally back testing as resistance, the consequences you would think would be similar to what we saw back in the day, many years ago. So you're broken down, man. It's like, if there's follow through, meltdown, and you fill the gap from May 4th and you go way lower. How much lower? Probably the COVID crash, right? Go down the COVID crash low at least, right? We're down 750. Nasty. There was another technical breakdown today on PNC. Very bad. I mean, it's very good if you just respect the levels and understand it. It's very bad for buyers. It's very bad for this asset if you wanted it to go higher, but for it to go lower, this is incredibly good. So it's all relative. So PNC below 116.40 is virtually, that's it, right? Exceptionally lower prices are coming. That's the liquidity area, and you're below it now. So there's just one last little support from 2017 that you didn't really test even today. You're just closed a little bit above it. So you can see the price action in between $100 and $115. It's normally warp speed up or down. And bearish engulfing candle almost had your lowest close of the entire drawdown. You fell short a little bit from the May 4th low, close slightly higher than that, down 1.5% today. And other ones too kind of recovered. CMA was getting nuked. It still ended down not very well. Engulfed down 3.44%. And you just think that $30 probably be tested again. Oh, look, all that happened was right at the short squeeze, the formal back test of the level, that old buy wall is now sell wall resistance, and that's it. Way lower, you'd think. USB, they were thinking it pretty much engulfed. It came close to engulfing, and it's just near those lows, near key support. You kind of get the gist of it, right? I mean, it's dangerous for regional banks. Again, way more downside potential. Okay, so just looking at some of those, we can look at the actual banking sector, which is the XLF. Not just regionals, but majors too. And a bearish engulfing candle. Down 0.56% today. Unfilled gap. I don't know what's changed. It's still really bad here. Okay. It was, one of your losers of the sectors on the day. The worst loser, though, was leisure and entertainment. But really, it's still above resistance or support. But yeah, you just got to wonder here, what does this represent? Is it actually a big deal where, the buyers broke all the resistances and then they rallied, but they just failed to capture any high, whether it was June of last year, August last year, February last year. They were unable to test that level before selling off. And here you are, bearish engulfing. But again, you're still safe above 39.26. That's where danger is. Like, that's where you're out. If one's like, hey, the asset, the buyers have recaptured a key inflection point where if it's real, then there'd probably be a lot more upside. That's the cutoff, right? Below that 200-day moving average and this gray zone, which is, around $39, you're done. Your argument, you don't have one. Your argument becomes strong to not own the asset when it falls below $39. So you just go under, like, is that a lower? That looks like a lower high to me. See how much follow through it gets. But yeah, this was like one of the worst loser today. Energy was also a loser. I mean, these index funds don't look too bad. Bearish engulfing candle. You know where this is going. This is like, made that YouTube short of the stream where I did the analysis. You're below the 200-day moving average, classic distribution going on the second high, and it's at an 88% retrace from the 2014 high to the COVID crash low. and it's rivaling the 2008 peak where it massively reversed for the crash. I mean, that's all you need to know with the rising wedge and bearish divergence. It's like legit an impeccable technical argument for way more downside. Like so many variables that you think, oh, the entire cycle's done. Like, oh, this is exactly where it goes into some sort of downtrend, some bear trend that lasts months. I would not be surprised because this is the level that's happened in history. Deep value perceived areas for shorts. And now you can, one high no one knows, the second high everyone knows. And they're offloading quietly as to not create panic. But that's the third high. And now you're just right at the demand line of the wedge. And you're right at a very key support resistance. A lot of level, right? 2007 and even 2008 and 2011, 2017, 18. You're just right above that and not many people buying, right? You're just this is not really like, there's not much price action here, which isn't really good. You need bids here. You gotta, the bids have to come in here or we will catch that resolution that the variables are all implying, which is way lower, easily 61, 68. Okay. So then you have the XLI, which was down today, industrial, where it's just, wow. Almost a diamond, right? Right, you have, this is very, very neutral, but if you look at it kind of like you're looking at the Dow Jones, it's actually bearish, where you got one high from August and here's your second high altogether.
Hey, thanks for the consistency. Think AMD has chances of breaking $100? My pre-earnings calls are up. Thinking of trimming.
Josh I, thanks for the first super chat ever. Thank you, man. I don't know. We'll look at AMD that had been recovering. So thanks, dude. Kingsman. So yeah, with XLI, more similar to the Dow Jones, where this is one high and this altogether is the second high. These two highs are lower than the previous highs from last year. So and just like, wow, man, they're really trying to hold on to this 98.81 level. You can see it. You're just right there. You're above the 200 moving average still. So of course there could be a rally here, but you're at the same effing price you were at November 10th of last year. It's just dead markets, man. Look at the Dow Jones Transportation. It looks so bearish. I mean, it looks like, oh yeah, we're going way lower. It still looks like it, man. Okay, same type of idea here, where it's like one high from August. Here's your second high here, and like the head and shoulders. But it's more so like the context of where this right shoulder is. The sellers closed the price below this mega massive inflection point. You cannot argue it's there. Closed below it, bearish engulfing, closed below the 200-day moving average. I mean, to me, it looks like what's coming next is the resolution of, oh, you failed to break out, Momo shifted back to the sellers and the prevailing downtrend, and there's like 13% downside. Look at the level, man. Look at the price action in between $12,000 and $14,000. And I'm telling you, right, you've been flirting with this level since you broke it, you know, since April 27th, but you just closed again below it. And that's just, anytime that happens, any follow through, that this would be the outcome. So massive downside potential on the Dow Jones Transportation that's showing us a lot of bearish stuff right here, right? Consumer staples is at resistance again. I mean, this is like, of course it could break. Good luck in these market conditions. But this is exactly where assets reverse. Reminds me of Walmart, you know. It's reversed here in December of last year. It reversed around this level in August. It reversed here in April of last year. It reversed here in January last year. So would history repeat itself, or this time's different? Maybe it is. Maybe it's different. Materials. Oh my God, it's so brutal, man. It's like Head and Shoulders, and then the right, and then look at this lower high, and this high, and this high, and this high. You're just right at that 200, but look how close you are to, I mean, you're at the breakdown. If you didn't close, I mean, you closed literally right at the price, at the support from 2021. I mean, below this, you can see the price action up, down, up, down, up. I mean, that's it. So if I think if TA is respected with what's going on, I think you go to $70 next. Hidden bearish divergence too. Get out of here, man. So it's so bearish, even if the price doesn't go anywhere for the next 20 years, because this is the market conditions we're in now. It's so illiquid. Audio check. We do that. Join the Discord. If you want. Whatever. Okay, XLV, which is healthcare. Super neutral. I mean, it might be Wyckoff distribution. You're not at a value area. You're making possibly a lower high. You've already done that. This is your signs of weakness, I think. No edge. But yeah, it's just up there. 0.28% today. It's up. XLY, which is the really interesting one. Kind of pulling an XLK where it made, it rallied above most of these local levels, right? Where, during the day as high as they would get, tested this 150 level, tested this high from March 2021. But that's it, up 0.51%. It looks incredible for upside, but again, just because it looks incredible doesn't mean it's going to happen. And you haven't broken resistance. So we're waiting for resolution here. Could easily fail. I mean, this is exactly where it's reversed before, so why not again? It could. If things get bad on the rest of the markets, get contagion, the VIX spikes. Sure. XLC was up, also had a good day today at 0.89%. Man, just has not broken out, is really elevated. There's bearish divergence here. I think there's even triple bearish divergence. So I don't really trust it, based on the exhaustion being shown on the oscillators. But it's really trying, isn't it? I mean, the buyers are really, really trying here. I mean, holding the price above February 2020. And back tested it. But this has been a really nice run. Long extended run. And this is just typical bear market stuff. But yeah, maybe the Momo shifted back to the buyers. It's a beautiful looking structure. It just hasn't broken out. So that means it is not an inverse head and shoulders. Do you understand? Until it truly breaks out, it's just a potential pattern. That's the way it is on everything. Okay. Potential ascending triangle till it breaks out or breaks down. Potential inverse head and shoulders till it breaks out. No breakout. So therefore, not a real pattern. Doesn't exist yet, but it's very close. Very, very close. XLU, second top gainer today. 67.89. Being regarded as support. That's cool. Still below the 200-day moving average. So, but maybe with this higher low coming in.
Look at past.
So, William, yeah, we'll look at, is that not platinum, XPT, XTP? Okay, we'll look at that. Thank you for the pounds. Sweat down. So only lower highs, but now a higher low has emerged where it was only making the same lows forever, then a lower low. The lower low only to test this crazy demand line that goes back to 2009. It's insanely well respected, isn't it? That's gorgeous. The COVID crash and then the test in October, but you have not seen that again. That's the level to be really scared about. Like what? A over decade long demand line gets breached. Something real bad's happening. But something uncharacteristic of this asset is it making lower highs, and you've done that. You did that in December, and you might be doing it again this year. So you get 71.13, you think might be tested, just not yet. All right, XLK, we've already looked at the Nasdaq. Here it is, man. Here's your XLK, still confined within that rising wedge with the bearish divergence. but it could continue. It hasn't hit the 618 yet. Very close, probably off by like 10 cents. But it was the highest daily candle close on the XLK since April of 2022. So we're talking about 52-week highs on the technology sector ETF. Nice, dude. So I just want to look through the index funds, right? So let's just look at the big four real quick. Start with Amazon, because dang, man. Dang. Nice start, right? This gap's going to fill, unfortunately. It's such a nothing burger gap. But not knowing how the banking crisis is going to affect the rest of the market, so far it's not been too bad. I mean, banks are collapsing and failing and crashing and burning. $500 billion wiped off the face of the earth. And tech's fine. Like, it's not, I mean, it's stagnating, but it hasn't been really going up more, but it hasn't been dumping at all. And it was just more so the argument. This is what I like. You know, I talk to somebody in real life and they'll ask me about like where I think something's going, whatever, or like they'll ask me about a particular asset at any given time, and it's just like I'm just trying to explain that that's just not how TA works. TA is just a risk management tool. It is not meant to really forecast. It's just meant to manage your risk, where if I understand what a Japanese candlestick reversal is, if I understand what an inflection point is, if I understand what back tests are, then I might be able to understand how to strategize an entry, a stop loss, and an equitable take profit. So, you know, anytime someone asks me about an asset, it's just like, it's just not how it works, because even if it was at a strategic area, I'm not going to act like I know where it's going next. But I think there's just this misconception about what reading charts actually is. So it's like, I didn't know Amazon was going to hold this level when I posted the trade setup. And the reason why I posted the trade setup was only because it was giving us the technical indicators we look for at a strategic area, right? The piercing line reversal at the inflection point from 2018. The Momo had already shifted, and it had been rallying for a few days. So it kind of just started giving me like shades of Shopify, similar behavior. And so, okay, and now just gapped up 3.35%, a big driver of the XLK and the Nasdaq today. Amazon, nice. So let's see how long it lasts, though. You just never know, right? But it was just a technical argument, man. I didn't know it was going to actually do that today. Okay, Apple closing same price it closed at on the 5th. On the 8th, still just elevated, but not really going anywhere. It's like the wheels are spinning, but just spinning in the mud, right at that high from August 2022 and no higher. There's an unfilled gap for sure that I do think would be filled at some point, but I guess you never know. Elevated, up 1% today. Will they ever let this thing collapse? I don't know, man. I don't think Berkshire Hathaway, they're not going to let it, right? They own too much of it. They control the world now, don't they? Google. All right, Google. Finally did it, man. Just waited and waited and waited. And then that potential revert. Nope. Up 4% today and heading to the next fib node within the golden zone, which would be 117. That'd be your next target. All right. Let's see if we could get it up there. You know, talking about even down here, March 14th, didn't know it would be rallying. No way. Let's see here. Could find it maybe. Might take an hour. see here. I got this, man. Just relax. Take this time to hit the like button, the bell, the sub, join the Discord, or be destroyed. Thank you. Good God. All right, all right. Not find this, man. Oh, okay, I found it. All right. So, never know if something's going to play out or not. You never know, man. But Google, this was posted, if you could even believe it, March 6th. Right, classic accumulation structure. You broke a supply line. And there was some hidden bullish divergence in the MACD histogram. Entry was just right there that day. And, you know, well on the way, finally. Can you believe it? You're finally maybe going to see the first target of the trade setup 2 months later. Yeah. But, you know, daily patterns can be way more reliable than less significant time scale. So you'd see that there is more upside off this pattern, right? This pattern developed at a very key level. It's not going to show, it's not going to generate. Key level, man. Look, you can see the high from 2020. So identifying a large accumulation structure after a massive drawdown at a support with hidden bullish divergence, an edge developed at the end. I mean, that's a combination of variables that you'd look for to be able to take a chance versus just randomly buying with no insight to what's happening. So we're on the way. Yeah, Brad, that'd be good. Be good. The Amazon would be a good short clip for sure. Okay, Google doing things, driving the market, taking the Nasdaq, that Amazon to the highest levels in a year. And now we'll look at Microsoft. And then we'll look at their requests, okay? Here's Microsoft, highest price since April. So 52-week highs on Microsoft, continuing to ascend up 1.73%, nearing very real inflection point from February and April last year. You break that, well, then you're going to be talking about heading towards the last frontier of resistance, which was from 2021, 338, 340. So it just keeps going, man. This is like a full retrace, full deep retrace. So don't, like, I mean, getting up here to near all-time highs is, my God, that's like the lowest risk area for short ever. So look, bearish divergence is still there, man. You keep climbing, but there's still just significantly lower levels of momentum on this side. But, you know, earnings, maybe that's a breakaway gap on high volume. Okay. Just such an outperformer. Tech is, you know, like really driving things here. Okay. The whole market. Okay, now let's go to that request. The request. 13 minutes till your daily candle close. Let's see here. Was it POLX on the KuCoin exchange? All right, well, here we are. I think you've requested this before because the only reason I have data, I have been here is because someone requested it. And it's cool to see that you're up 20% today. Can barely even tell, but breaking back above this high from October last year could be a lot of upside. Buyers defending the 200-day moving average, hidden bullish divergence. You have not seen positive momentum since April 12th. So could be going positive after breaking back out for just some sort of rally here, just some sort of retrace. It could also be argued that it's an M shape. Is it deep enough on B? Could be. Definitely. Yep, that's deep enough. Slightly above 38%. And here's your 8-8. Oh, yeah, you got a reaction occurring at the pattern completion zone of a bullish bat and kind of an uptrend. So let's see how high that goes. I mean, really, if you look left, imagine 1.8 100ths of a penny, maybe. Nice M shape, completing there and starting to react. Let's see how it plays out. That's not bad. But anytime an asset's up 20%, what are you going to do? You're going to long it now when it's up 20%? What if it goes down 10% tomorrow? You panic, freak out, and then you lose that much on your position instantly. That's what happens when someone's buying into assets that are on the day are up 20%. Normally, what you want to do is like one looks for an asset and maybe a red day they layer in or something. All right, POLX, interesting. Pivoting after a full deep retrace, right? There could be value perceived for buyers, just like we're just looking at an asset that runs up. We're talking about Microsoft hitting an 886 from its November 2021 highs. That could be a value area for shorts. Just like here, if it dumped like this, crashed, and then rallied, it's at the 200, maybe it's rejecting it. That could be an area where there could be a reversal to the prevailing trend, which has been up. So not bad for an S coin, right? A dead S coin market, not okay-ish. I'm just happy to see people are actually trading it, man. Things are getting so bad and sideways on Bitcoin that we're running out of room on the 60-minute chart to even have it, contained within this little screen here, from March 18th all the way to now. Just, wow, running out of room. We'll have to go to 2 hour. Okay, so things can chase. Let's go to, what's up, Caleb? I didn't see that sneaky $2 super chat. Let's see, Josh wants AMD. Struggle man waited so long for Google, feels good. Shopify too, same situation. The only way someone was gonna really make money using TA in these market conditions was just patience. Okay, AMD, what a rally today. What it gapped up. It was up 2%, down 0.12% after hours. My God, look how I love how you broke AMD buyers that breached the August 2020 peak, right? That's awesome. But now it's a zone. It's not ever going to be just like one high. There have been these other ones too. I've had plotted. This thing's been plotted for a very long time, for years. This gray zone here, and you've just closed slightly below this high from December 2021, January 2020, December 2020, January 2021. This has been a reversal area before, so I think this gap would probably fill, and it's not a big deal. It fills tomorrow and then rallies, but that's where you are. It's been a nice uptrend, right? It's been uptrending like a lot of tech has been, but like the index funds, has it taken out its previous high yet? Nope, March 23rd, still below that. Still not broken out. That's a massive level. I think if you see this level breached, I think you could have a target of like 119. Chances of breaking 100 pre-earnings. Oh God, are they reporting earnings? What do you mean pre-earning? Oh, you took calls and it's rallied and you're up. Okay, I gotcha. It's all about this level, right? If I just went on a little rant about not acting like I know where an asset's going, all I can do is strategize at inflection points, looking for certain things. This asset is at that resistance. It closed below it. And if that's not a potential shooting star, which all it has to happen is no follow through tomorrow, just like you saw on the Nasdaq, right? There was no follow through, or on Google, no follow through on that potential shooting star. This is a potential shooting star. If you close lower tomorrow than you did today, it would be a confirmed shooting star at resistance on the second high. That's pretty bearish right there, right? When you do that, you make a lower high locally. You do the Japanese candlestick. It's painted and confirmed with follow through, and you're at a resistance. That's like bearish. That's not bullish. Just like if the asset held it, like if it was like, oh, potential bullish hammer, catches follow through tomorrow, rallies, right? This chart flipped over, and it's at support, and it's confirmed, and it's a one low, then it's the second low. There would be cause to understand that there could be more upside, because it could be a confirmation low. So you're at a higher risk area for fresh longs, but I know you're in the money. So it's just all about, are there enough market participants? Is the sentiment good enough for AMD to breach $98? You just don't know. Like, I'm not gonna act like I know. Nvidia, what an outperformer, it's gone, right? It's just, this is the rich man's Bitcoin. Okay, Nvidia is the rich man's Bitcoin, where it doesn't do this bull crap. Wicks, swings 5.5% a day for no stupid reason. Oh, it's the US government. No, it's not. Yes, it is. No, it's not. It's nothing. You're just sitting at this high from March 29th, and it's the best performing semiconductor in the world by far. And I think at some point it will take out one of the market caps of the big four. Sure. You just give it time. I just worry about, like, if we start rolling over in the coming days, triple bearish divergence argument could easily become a thing. Same with Apple. So just up there. But down here, right? So you asked me about AMD. One could have asked me about Nvidia
China
in January.
China.
U.S. dominance daily inverse head and shoulder.
So anonymous. I don't know. Maybe. Thank you for the 5 contribution. Hold on a sec. Let me pull something up for you. Ooh, it might be there. Just give me a sec. Okay, so like it was January 13th. And in the Citadel, in the Patreon Citadel, it's like, hey man, we don't know where an asset's going next, but we certainly understand how to identify momentum shifting structures after they've back tested key levels of support. Buyers defended that level, and then that higher low rivaling the low from July last year. But more importantly, buyers defending this 147 that happened to be right there, the old all-time high back from September of 2020. Right? And we don't know what's going to play out. This could have failed, man. But we knew for a fact that was closest to an entry strategic area where one could set up a stop loss below that area the buyers defended, the left shoulder as well, right? Minimal losses for potential high reward. And you can see, and not all of them did this, but clearly this one played out. But I'm not going to say like I knew that this was going to play out. All I can do is just identify potential structures. It became confirmed as an inverse head and shoulders January 23rd on the break of the neckline. So, and guess what? The measured move of this inverse head and shoulders was $265. It achieved that the date of March 21st. So thanks again to our friend's first super chat, Josh I. Look, man, if you request something, sometimes I can't really give you much of anything besides just the levels. because there's no actionable long opportunity or short opportunity at that particular time, right? Okay, next request was XTP. Find out what it means to me, because it's not platinum. It's like, there's XRP and there's XPR, and then there's XBT and now XTP, which is tap. Oh boy, tap to the US dollar. Oh my god. So on Bittrex is extinct. They're bankrupt, so it can't be XTP, William, right? See another exchange. Bittrex. Bro, are you kidding? It's only on Bittrex. Is this exactly what you wanted, dude? Tell me, William. I know you're out there. Thank you for the $19 super chat. Is this it? Is this what you wanted? Does it even trade? It's open. I'd never touch this ever for the life of me. But since you requested it, yep. Look on the 8s. Whoops. Sorry. There it is. Yep. Late. Hey, look on the 8s. Buyers defending this 2.9 tenths of 1 penny from 2020 and 2021. You've tested it, and that's it. That's all I've got. I'd never touch it. All I can do is tell you about the level. If you want another level, pretty clear at 1.03 cents. Those are your two big levels, so you can clearly see the price action. Below that will be another level. Wasting my memory, my trading view memory on this crap reluctantly. It's down there. It's like 3/100ths of a penny. Okay. Yeah, they pumped and dumped. This is a pump and dump. A tap was a pump and dump. There was nothing about tap that really changed the world. They didn't start making money. They didn't start reporting that they were making money. They didn't get a partnership with someone awesome, some reputable company that's going to utilize their technology. Nope, none of that. Just a pump and a dump, and it may not even be done dumping. It's just finally, after all that selling, there were some limit buys set up by the bots at that support from 2020, 2021. All right, there it is. There it is. Jesus chimes. All right, let us go. Let us go to Bitcoin and take a look at the insane close that buyers defended the demand line once again. Wow. Amen. There it is. You want some more of this, dude? Okay, sideways 5.5% swing from the high to low. What a joke. Closed exactly where it closed yesterday and the day before. Riveting. I have more fun looking at bank stocks crashing, to be real with you, dude. It's just, this is awful. It's not really fun, right? Price action's fun. Liquidity's fun. Assets sitting, doing nothing for 2 months is gut-wrenching. It's rough, dude. So it was technically a lower low. Yeah, sure. It was. Traders technically, even, I was just being general, right? Like pretty much they've been settling up near or at the same price. But yeah, every day it's been lower low. Gotcha. All right. Sure. That happened. Still above 40 on the RSI. But again, they're not even crypto, where you're looking like the trades are on the stock market, really. As we just looked at Amazon, that, hey man, it was, momentum shifted over the course of almost an entire year, if not a year, and then it broke a key 2018 resistance and then back tested as support with a piercing line reversal, which is your signal. That's great, man. Easy to manage risk, and there's kind of an edge, and the buyers maybe have taken back control a little bit. We'll see. We don't know, but we did know it's easy to set up a stop loss, and your argument is pretty good because of the Momo shift back to buyers. This doesn't have that. In fact, even if it breaks higher, the momentum has shifted to the sellers based on the lower high than the previous high, the up thrust back test of up thrust. So I hope this holds. My God, it did it today. I thought it wasn't going to hold, and it did. And you better start pivoting right now, and it better not be a joke loser scam like the price action now. So if it doesn't hold, you probably be seeing 25,000. But is there even enough liquidity in the market for sellers to push the price that low? That's what I don't even know, man. Like, it's so dead now. Crypto is so effing dead. Yes, of course, we'll go to Pepe Coin and Pepe Loge Don Coin and whatever, all the other ones, the spinoffs of the Pepe, Peepo Coin and PP Poo Poo Coin. Those things are like, that's called a casino. You could, guess what? You got about the same probability of getting one of those micro S coin lesser thans. You about the same probability as going to a casino, hitting that roulette table and winning big. Okay, it's the same probability. So over the casinos, you get free drinks. With speculating on micro S coins, you don't get free drinks. You got to pay the fees to buy and sell. You go into a casino, it's free, right? I mean, there's a rake and all that, but I'm just saying, right? If you're gonna gamble, go somewhere that's fun. I know Crypto Glasgow, Don and Deck are in Vegas right now for like 2 weeks. They said they didn't want to trade S coins; they wanted to gamble at a casino, which is the same effing thing. Well, let me post the Discord link. Remember tomorrow, hanging out with Scott Carney on his stream at 12:30 p.m. Eastern, and then he'll be hanging out on mine normal stream time. Because let's be real, I'm almost certain it would be normal stream time, because there's no way we're gonna be getting enough price action to get me live at a regular time. There's no way, man, unless it's a dump. What's up, Egg Roll Corporation?
Can we look at hog futures? I might need to make an order.
Yeah, talk about the gaps up and down are just ridiculous on that one. I don't know, dude. Okay, good luck, Bitcoin. Just keep doing what you're doing, which is nothing for months. No one cares. Great. But at the same time of saying that, Bitcoin is a precious asset, I believe commodity, because authoritarianism, bought and paid for, installed politicians in our government, completely compromised. As you can see, that news that broke today on the scandal, which is directly connected to the Communist Chinese Party. Yeah, the person who's in charge of our country, has the borders open, he's had them open. 6.3 million illegal immigrants have crossed this border since his term began. Has direct connection to the Communist Chinese Party, and there's paper trails, bank records, shell companies. That broke today, as we were just talking about it yesterday. It's like, my God, it's almost like Communist China just is our government now, and now we know it literally is. Okay. Makes sense. So that's why, screw the price action on Bitcoin. Forget about it. It's deeper than the price action. It's deeper than the price. The price is not even relevant on Bitcoin, because the role it's going to play in the future it's really bright, right? It's very significant. So that's cool. But technicals, price action, it's not really a good spot to be buying, going long, no matter what, even if it goes higher. But I hope it goes higher. Okay, I hope. But hope means nothing. I just want you to understand, I'm on the same page as you fundamentally with Bitcoin, but technically it's just not a good spot. Okay, so that was just your local on the 8th. We just went to it. I don't know, man. Good Ethereum too. Why? I don't even know anymore. It's like look on the 8. It's like, oh, it's partly cloudy. It's mostly cloudy every single day. That's the forecast every day forever now. Okay. At least we don't have to update you on that. So it closed for sure below the heart line today. It closed at its lowest price since May 1st. And the heart line has been back tested as resistance now, which doesn't really look good, but no one's really trading this stuff. Like, it's just bots. Extremely low volume. But technically, that wasn't really a good close for Ethereum. Okay. Not really your greatest close there. Okay, with where you are and what has occurred before today, right? The up thrust, back test, up thrust. Any update on the Bitcoin Commerce meetup? I mean, like, it's not going to be formal. I'm not going to like rent out a room. Scott Carney's not going to be there. Brad's not going to be there. It's just going to be me. Like, I live here now. And, you know, I'm not going to be just like planning stuff on my own and having to deal with that. And then having to deal with the social side of it too. So not really, there's no plan. Haven't really heard back. You know, I don't even know about doing the boat. It's easy to get a boat, you know, to go into those chartering companies. Done it multiple times, but at this current time, no word. No, like just like the right when crypto markets collapse in sentiment and volatility and volume, so does my stream, so does this community. It's just the way it is, man. So you can imagine record lows on hype. So when there's record lows on hype, there's not going to be much interest to do meetups and hangouts and stuff. Okay, that was the update. So, nothing. I got invited to Benjamin Cohen's party. He's having a party down here, so.
I've always thought that wealth was superior to power. Little did I know this was the plan. In a world with no purchasing power, the only currency is actually power and influence.
Yeah. Well, when they print wealth now, it's so effed up, man. Like, think about some boomer that worked their entire life. They're 60 plus years old, 70 plus, right? And you've got this Fed over here that they printed so much money that it's like the entire life's work of a boomer, or anyone for that matter. I'm just making an example because it's the extreme example of someone's amount of time they've worked to build a net worth, you know, that they could pass on their family, to have a home and all that. It's been just printed into oblivion. Purchasing power just collapsed, right? So, power and influence is the purchasing power now. Virtually, you can, yeah, definitely. That's why we're in such a sad state of affairs. Yep. Thank you, Gully and Wise, for the wise words. Thank you, dude. All right, so didn't request. We didn't look at gold, so I'll look at gold real quick for you. Gold and silver. Gold it's hanging in there, man. I mean, it's just so elevated. It's at the level where you'd think it could react, reverse, sure, but it hasn't yet. And there could be something fundamentally behind it that would prevent it from falling, which is central banks and governments buying at record pace because they all know what's coming to the US dollar. And
can you look at dollar Baba, please?
So Hunter, thanks for virtually destroying everything that you and your dad have destroyed, everything that this country was built. I mean, you know, you can say what you want about the guy before, but this is insane, right? Being compromised completely by a foreign rival, like your biggest rival. What? It's legit insane. Look at Baba, like right now, I guess. But gold's still up there. Don't know how it falls. Technically, It's at one of those levels where it should, but it's just paused. It's too much demand maybe right now. Okay, here's Alibaba. Yeah, the whole like Momo shift, is it gonna... So here's the problem. There are a couple things that, they're there. You're
like you said, RIP boomer gains. The Fed is the communist great equalizer. Unfortunately, all of these Zoomers that their idea of equity isn't so fun.
Oh man, I don't even want to know what it's going to be like when Zoomers become adults after what's happened. I mean, this is what locking down an the entire world for a year, preventing them from developing social skills, right? I mean, these are innate things. These are things that you're doing subconsciously. You don't even think about, right? You're in high school, you're going through puberty, you're doing these things, and you're just developing skills. And like they were robbed of that. At the same time, communist China, TikTok. So, the communist Chinese are manipulating the algorithms to push the most degenerate, mentally ill, stupid crap you can imagine. And that's taken a major toll, as you can see, with what's happened to society, to the youth. They're ruined. And they're constantly being ruined, and it's like no one's doing anything about it. Like, oh, what's being done about it? Oh, they're going to try to pass some bill that would ban Bitcoin and destroy internet freedoms. That's how they're going to ban TikTok. They're just going to become communist China by banning TikTok. That's what they would do. That's their plan. You get a bunch of loser, seditious morons in our government. So they just don't enforce treason anymore. They just don't do it. They just, nah. Okay, so your Alibaba, is it matching the second low from March and May of 2022? Is it doing it here? There's bullish divergence maybe. You're below the ice line though. It's an intriguing chart, but it's like, hey, it's communist China's chart. I mean, this is their boy, e-commerce, second largest e-commerce in the world, right? And this is what I'm saying. You're not above the level you need to be above. So if we could see some price action and we could get back above $86, $87, I think it'd be a safer bet on Baba versus trying to do it now. I mean, this would be technically lower risk, or I guess you would get more upside if one was to buy now, but I think it's riskier until you buyers breach that level and then maybe formally back test it. Like the same Amazon stuff, right? Amazon did this piercing line right there, and that was the trigger before way higher. You don't have that yet, so it'd be, I mean, Wyckoff talks about people go long on the springs. Those are risky trades, but then the less risky of the trade would be the spring back test. So you could be going long right here under support with divergence, matching that low. Just make sure that their stop loss is like 79.30, $79, and that's it probably, man. You would not want to own this asset at all. It's got to be super tight. If you're longing below that level. But yeah, I mean, very intriguing locally, right? You got a drag in there, but I think if we get it back above $86, $87, that's a long trade setup. If we get the spring and the back test the spring, that would be an actionable long for a trade setup. And I would post it to patrons and Citadel members all day. So have your alerts set up where I did around $85, $86, $87. If you hear this beep, you know that there's an attempt on a break above a key ice line from a long time ago, going as far back as 2014 and 15 and 16. So that's what we're looking for. Okay, nice request, Hunter Biden. All right, that worked. Covered a decent amount today, man. I don't know. I've been live for an hour and 15 minutes. It's one of those days. You knew it was going to be. It's going to be like this tomorrow until we get the big red candle or the big green candle. You don't know how much longer it's going to take. You think it'd be like sooner rather than later now, because it's already been 2 months of consolidation, right? Impulse consolidation, impulse consolidation. Well, getting about that time. But we are in that sell in May, go away period. And this year may be no different. With the way banks look, like one that I have been eyeballing especially hard is OZK. Yeah, I got all these alerts set up on it and stuff, right? And there's reasons, because this is the bank, the regional bank with the most exposure to commercial real estate, which is, in dire straits right now based on interest rates. And so, and technical, it's the technicals too, man, like really, really impeccable here, where you see this level, 2014. What? 2014? That's so long ago. 2016. Look, 2019. 2022, right? Clearly breached and clearly back tested. You even, look, dude, these are subtle things and it only takes a few days sometimes. But here's your up thrust, a confirmed up thrust, April 21st, when you fell back below the level bearishly engulfed. And then the formal back test of up thrust happened over the course of 2 days, April 28th and May 1st, Friday and Monday. And you've been catching follow through from there. So that level is not a joke. It is extremely real. And it is a form of confirmation that what was once resistance support is now resistance again. So it's time to mark it down. So, it just rivaling the close from yesterday, and even rivaling the close from the 4th, which was your lowest candle close in years, in 3 years. Just sitting at a gap fill. You would just think with this type of price action, $20 target, $20 to $21, way lower, man. Look, it's the completed harmonic too. This should be in Scott Carney's book. Okay, absolutely impeccable. Bear shark pattern completed, type 1 return, type 2 return, below the 200. It's like everything you could dream of, man. It's like a cycle ending reversal. So good, man. And there are other ones out there. A lot of energy stocks doing the same thing. Energy and financials number go down, maybe even more. 3-day, I think, had the bearish divergence, right? Yep, it was the 3-day bearish divergence at the completion zone of that. Oh my, so perfect, man. But look at this run from 2009 all the way to 2017 when it hit its all-time high, its new all-time high. This was the attempted rally from buyers, okay? And they failed. And so they have certainly relented. They've given up, and now the sellers have retaken control with confirmation, and all that is left to do is to mark down again to see the lows we saw during the COVID crash. And if you look at the weekly or look at the monthly, you understand kind of what it really is. It's a massive confirmation high. One high no one knows, second high everyone knows. Yeah. And look at this monthly. Nice shooting star right there. Wow, it's brutal, isn't it? Okay. Good luck, regional banks. I don't see how they get out of this without a bailout. I don't know. Like, even see cutting interest rates will begin like the equities crash, I think. I mean, just like it's done, like it's happened in the past. Once those interest rates start cutting, people are asking for it. Be careful what you wish for, because number gonna go way down when that happens. Okay. All right. So says Lizzie K. I'm obsessed with all banks. You know why? Because I'm getting price action. They're giving me what I need, which is numbers go up or down, and it's just been bearish. And then all the energy stocks too. beautiful downside potential on them too. So thanks for the likes, love, support, contributions, everything between. Be sure to join the Discord if you haven't. Again, here's the link. That's right, Cactus. Yeah. Just wait for it, man. We're not, and it's not done. Look at this. Look at Charles Schwab real quick. Sorry. We didn't look at that yet. It's just like, what? This is a major bank, man. A major. And it looks like Pundy coin. It looks, you know what? This asset looks like Pundy coin. The old Indian scam coin. It looks like any S coin that broke support and is back below support. Okay. The target is $38. It broke support, it back tested it, and it's rolling up. It'll take a miracle. Hidden bearish divergence in the lower high, negative momentum's only begun to build, and you're not oversold yet. Look at this, just hanging out in the midst of the bearish control zone. 36. Oh, after, look, right? The oscillators reset on the initial drawdown. So there will be another leg down. Most of the time, this is how divergence develops, right? You get another drawdown that gets you oversold again, but after that sell-off, eventually a pivot starts happening, and that's when you're oversold for the second time, and it's higher level RSI, and that's when you get bullish divergence on a significantly lower lows, and then there's some seller exhaustion, and then we can start talking about maybe a reversal, but it would probably develop completely at $35, which we knew anything below 5150 is 26% downside plus. So Charles Schwab, yes. Okay, best of luck to you on your Bitcoin lottos and on your Pepe loser coins. They're just they've really done a number on this market. And the more the liquidity dries up, the worse it's going to get, unfortunately. That's just tough love. That's just me saying it. It's just going to get worse. Very similar to the Bitcoin pairing market in 2018, just where it just got worse and worse and worse. Okay, so thanks for coming out. Thanks for likes, love, support, contributions, everything between. I'll just be back. Till next time. Respect the T. A.
You